Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome once again to Pasture to Pin, a new series from the EverAg Insights team. Each episode, we bring you news and updates on the markets with the intention of helping cattle producers manage their risk. I am your host, Michael Todd Rowen, coming to you from my home office in the Texas Panhandle. Before we get rolling, let me timestamp this episode. Today is Tuesday, August 15th, 2023 at 3:03 in the afternoon. Before I introduce my co-host and our guest, today will be an audio-only format as we have some teammates on our production team out on a much-deserved vacation. Today, as usual, I am joined by my co-host and teammate, Mr. Trey Freeman. On this episode, Trey and I will be welcoming the Queen of Wisconsin and EverAg's Director of Grain Foundations, Miss Britt O'Connell. Britt, Trey, welcome to the show.
Thanks, MT.
Good to be here again, MT.
Absolutely happy to have you both. Kicking off the show, we will be looking at pasture conditions and weather. We have 40% of the U.S. pasture conditions in the good to excellent category, an improvement up from 38% the week ending 8/6. Some standouts in the good to excellent range. We have California at 50%, good to excellent. We have South Dakota at 60%, the much improved Nebraska at 62%, and the king of the good to excellent range, Wyoming, coming in at 98% good to excellent. At the other end of the range, 32% of the lower 48 is in poor to very poor condition. That is unchanged week over week. Some standouts in the poor to very poor range. Texas tops the list at 70% of pasture conditions ranging poor to very poor. That is a big swing led by drought and heat, mainly in the central part of the state. Washington, 51% of their pasture is poor to very poor. Minnesota, surprisingly, 50% of their pasture is poor to very poor. And Missouri is at 46% of their pasture rating poor to very poor. As we look at the 7-day forecast, west of the Rockies could see some continued good rainfall, as could the eastern Corn Belt up into the Great Lakes. Unfortunately, the central Midwest and central to southern plains that could use some rain look to continue to miss out on some rain as this heat dome persists. Switching to the cash market, feeder and calf demand in the sale barn continues to be consistent. Feeder steers and heifer prices saw no large increases in the past couple weeks. Steer and heifer calf prices under the 500 weight category continue to trend towards the mid 300s, with prices at Oklahoma National and Oklahoma City West trading as high as the 340s. The CME feeder cattle index ended last week at 244.81. down a modest 39 cents from 245.20 the week ending 8/4. Typically, August volumes are a lull as we wait for the volumes in September to kick off the fall run. This year, it will be interesting to watch how the fall run takes shape amongst what is likely the height of our tight supply. On the live cash cattle side, prices are trading slightly higher since our last episode. Last week, cattle traded in the South at 180 to 186 live, while trading 188 to 190 live and 296 dressed in the north. As we have talked about before, these cash prices are putting the packer and their margin in a tight spot. One thing the packer can do, and maybe even the biggest thing to do to manage their current margin, is to slow down the kill. And slow down the kill, they absolutely have. Slaughter numbers came in at 603,000 head for last week, ending August 11th. This is down from 613,000 head week ending 8/4, and down from 633,000 head week ending July 14th. Time will tell if and how much this will actually back up cattle in the feed yard, which could help the buy side of their margin. However, this reduced kill has provided a decent bump higher for the cutout, helping the sell side of the packer margin. Per today's AM release, choice is at $307.47, up $1.97 on the day, and up $4.86 since just last Friday, August 11th. Historically, late August to early October bring plenty of market-ready fat cattle from the spring run of feeders and calves. However, the theme of tight supply for feeder cattle also applies to live cattle. Trey, what are we looking at in the futures market since our last episode?
You bet. Slightly lower last week in the cattle complex. Not a whole lot last week. That continues this week. We closed lower for the third consecutive trading day today. In fact, lots of red on the board today as crude is $1.50 lower and equities moderately lower, which is dragging on commodities in general. September feeders finished 35 cents lower at 249.77, and October fats 70 cents lower at 179.97. Overall charts continue to coil up and building pressure in the cattle complex. This often indicates a strong breakout to one side or the other. The way I see this sideways action is bull markets need to continually be fed bullish news to move higher, and prices have been climbing all year as the trade knows the supply shortfalls the market is facing. Consumer demand has been strong as well throughout. It just appears the market's comfortable where it's at. We haven't exactly had any bearish headlines. It's just been the same short supply story all year. Cash has traded sideways really the last 2-3 weeks. Yes, box beef prices have found support the last couple of days, but overall cash is going to need another leg higher for this market to build upward momentum again.
Very good. Thank you very much, Trey, for that update. Now to reintroduce our guest, Everag's Director of Grain Foundations, Miss Britt O'Connell. Britt, please give us an update from the world of grains.
Thanks for having me today, MT. On the grain side of things, we really view this break in both the corn and soybean meal markets as opportunities for buyers to start getting some coverage on here. We've seen protein now trading sub $400 a ton. We saw a break today with front month soybean meal trading close to that 380 mark, and out across the time curve, you're looking at probably like a 365 to 370 clock average on protein on the board. We really view that as a great opportunity to, like I said, leg into some coverage on the protein side. Corn saw some weakness today. We traded down 12.25 on the Dees contract, closed at 475.5, broke down below that old low at 481, and now I think opens the door for a possibility for a slide lower in this market. But for guys who are still wide open in corn, we want to encourage guys to start looking at getting some coverage on here. As we start pushing down to prices that we haven't seen in quite some time, buyers are starting to look at these as good value and get coverage, because there is still some question marks out here around corn yield in particular across the country. And while crop condition scores have improved on both fronts, the question mark that remains in corn in particular is what kind of damage was done with that early season drought. We know that the corn is determining ear girth at that time when a lot of areas were experiencing the worst of the drought. And so the question mark will remain until we probably roll combines through fields as to what, if any, damage was done, and the strides that we've been able to make through some of the breeding programs across the country on that front.
Very good. Thank you very much, Britt. That was an excellent update. Before we close, let's do the second ever round of Coffee Shop Talk. Let's go around the horn on the biggest ag and ag production talk and or biggest questions in each of our areas. Trey, will you lead us off, please, sir?
A lot of the calls I've been fielding here from folks here in the Oklahoma Panhandle and northern Texas Panhandle, again, it revolves around the crop and weather in the Midwest. We're on the axis of cattle country, lots of irrigated corn in our county. It's a feed deficient area, so our basis is historically very strong, but it's the crop in the Midwest that largely dictates the board action. So livestock producers are wondering as to when to pull the trigger on protecting feed costs on the board. The corn crop in our area looks great. We've had plenty of moisture, and the hail and winds and the unwanted weather has stayed at bay, but a lot of it comes down to the crop in the Midwest. Our basis has come back into about the historical range at around 40 cents over the board after seeing as high as $1 over at one point last year. Again, like Britt said, looking at corn prices today and on the board today, we're seeing prices we haven't seen since December of 2020. You got to know your margins, but have that trigger finger ready. Multi-year lows under $5 and corn prices warrant a ready trigger finger. And right now does not appear to be a bad place to begin legging into some sort of protection on your feed costs.
Thank you, Trey. Britt, what is the talk up in Wisconsin?
kind of similar to what Trey was saying, the Midwest, everybody here is wondering, what are corn yields going to be like? What are soybean yields going to be like? We've certainly seen an improved weather pattern here in the last 4 weeks or so, but question marks still remain. And so as a result of that, that's probably the biggest chatter that we're hearing on the production front.
Very good. Thank you very much. As far as guys, I am talking to Southwest Kansas on down south of Amarillo, towards Hereford, Dimmitt area. These timely rain showers that we have had in back week of July, front half of August have been very, very nice. We are also experiencing cooler temperatures, which is not normal for August, but is very, very welcome. Dipping outside of the cattle chatter, which is the usual around here, replacing it with dryland Milo, just for those that want a random fact of the day. This dryland Milo more than make a crop this year, and that is exciting people, especially when you continue to talk about the stressed crop in the upper Midwest, what is usually our big producing corn states. That is a wrap for this episode of Pasture to Pen. Thank you to all of our viewers for watching this episode. If you have not done it yet, hit the like button, hit the subscribe button, and click the bell to be notified of future episodes. Thank you once again to my co-host and teammate, Trey Freeman. Thank you again to Britt O'Connell for joining us on this episode. A big thank you to Corey, Hattie, and the entire EverAg Insights team for making this show a reality. Until next time, stay safe, pray for it.
At EverAg, we partner with every corner of the agriculture industry, from dairy to livestock, crops, and agribusiness, to deliver intelligent supply chain and risk management solutions. We are EverAg, everything agriculture. Learn more at www.ever.ag/everything.